All right, let's get it. Um, Welcome. We back again with another crypto class, and we're gonna be covering borrowing against crypto assets today. Um, like I said, I appreciate all of y'all coming and joining me today, and taking advantage of find out what you could do in this bear market that we experiencing right now. I'm not certain how long you've all been in crypto, but you know crypto goes through cycles like this, but you want to find different ways during times like this to capitalize on the fact that you're invested into these assets. And this is one of the ways that I utilize. And if you can't completely time it, perfectly, but if you know, continuously like dollar cost average and simultaneously borrow against your assets, you will be well off in the long run, long as you're on a credible exchange or a decentralized platform. I talk about decentralized platforms briefly, but I don't use them because, as we know, the latest with Celsius, with them blocking investors from withdrawing their assets and somewhat forcing them to go through a liquidation because of that. So we're gonna cover that also, but let's go and kick this thing off. Borrowing against your crypto assets. All right. So first and foremost, what is a crypto loan, right? So a crypto loan is very similar to any loan that you would get in our normal circumstances, whether it be um, a loan for a house, a car, or whatever. But in the aspect and what we're looking at today with a crypto loan, we're borrowing against a asset that we currently have. And, you know, the differences between what you would have with the conventional loan and a crypto loan, it doesn't require you to be vetted based off of your credit score. You can't be discriminated against for whatever reason you may feel you may be discriminated against, as we know in historical um settings. People have been discriminated against based off of their race, color, creed. um in the crypto world, they don't care nothing about that. They just care that you have an asset that can be used as collateral, and you have enough of that asset that's worth being borrowed against. So that's the difference here. It's very easy to get a crypto loan. Like, you don't have to speak to anyone, you know, in most cases. Now, in the centralized methods, which I'll cover, they may have you go through a more in-depth vetting process, but in most cases, it's a very simple process, right? Um, but and like it says here, if you are unable to repay the loan, the lender will sell or withdraw your crypto in the event that you're unable to pay. So, any questions there? Feel free to chime in. It's simple. Like, it's just a loan. It's just the process is a lot easier because you don't have to be vetted, or you don't have to have your credit score checked by anybody. So let's keep it rolling though. All right. So how does crypto lending work? Right. So cryptocurrency backed loan employs cryptocurrency as collateral. Like I mentioned before, like you have a certain amount of cryptocurrency that, and say Bitcoin or Ethereum, and you're currently in this downtrend of a market, and you're like, I'm tired of seeing y'all stand by. Okay, yeah, we're good. Go back. All right, so yeah, like I said, you know, you're in this current market where everything's bleeding out, and you're like, I need to figure out what can I do with my crypto during this time that could also benefit me now and further along. And when you go through uh crypto or borrowing against your crypto assets, you have to put up a certain amount of collateral. It doesn't have to be hundreds of thousands of dollars. You can literally on some platforms put up $50 and borrow against it. It doesn't require a ton. But when you get onto these centralized platforms, they may require you to put $10,000 worth of that asset up, right? So on on these platforms, you still possess the crypto to some degree. Like it's still yours, even though you're borrowing against it. It's just on the centralized platforms, like a Celsius, Coinbase does some borrowing or lending. Binance, they do the same also. On some of these centralized platforms, could you mute, please? I'm not sure who that is. Um, but on these centralized platforms, they require you to have a lockup period. So that lockup period could be 30 days, 90 days, 180 days. And during that time frame, you're not able to move those assets. You can't, withdraw those assets to trade those assets. You're gonna give those assets to an exchange to hold them as collateral and until you pay back that loan, just like anything else. Until you pay back that loan, you won't be able to relinquish those assets back into your possession, right? Um, like it says here, people may look into crypto loans if they want to take advantage of their benefits and don't plan to trade or use their crypto assets soon. And that's pretty much what I was saying. Like during this bear market, like you have some crypto assets right now that you feel like, yeah, I want to keep these, but I can either sell them, at a loss, or if you're still in profit, depending on when you got into that asset, or I have this other option now because D-Wiz is telling me about it, about borrowing against that asset so I can accumulate more assets in the process. So um I personally didn't know of this concept until the beginning of last year, end of 2020. I didn't know anything about it, right? But and I didn't actually utilize this until what was it, the end of last year, and I saw how significant it could be, right? So during these times, if Bitcoin goes down to, I mean, worst case scenario, I'm seeing it could get worse, under 15,000. Like this could be a prime opportunity to, for one, purchase Bitcoin or any of the assets that are uh that are able to be borrowed against, and you can then also borrow against that same crypto to buy more of the same crypto, right? Um, so you can, in some cases, have double that, and we'll get into that, and I'll actually show y'all. But that's pretty much how crypto lending works. Like you put up a certain amount of collateral, and you can borrow up against, on most exchanges, is up to 50% of what your collateral is. But on some decentralized exchanges, you can borrow up to 90%, which I don't recommend, because you can be liquidated, which I'm gonna touch on that also. But let's keep rolling. So, like I mentioned before, you have two different types of crypto loans. You have the centralized and you have decentralized loans. And these are two of the top that that most people in crypto utilize. Now, me personally, I only utilize these DeFi decentralized platforms, which my preferred platform is Aave, right? Which I'm gonna show y'all an example of how to utilize that. So um but to describe what a centralized exchange that allows you to borrow against, it would be a central entity that holds your uh that that is the sole custodian of your asset. So instead of you having a DeFi wallet, you go to a platform, you either purchase assets on that platform or you send assets to that platform and they hold it for you as collateral, right? Um, so in that process, they have the ability to, like we seen yesterday with Celsius, and it's weird because I before the news came out about Celsius, I had this up here as an example because I know majority of people that are crypto that are borrowing against their crypto assets, they're so accustomed to um, you know, banks and the traditional way of doing finance and dealing with loans. They are so accustomed of the traditional way, so they looked at the Celsius route or the what is that other platform? I think it's called Nevo. I could be saying that wrong, but I'm gonna show y'all it anyway later because I have that one as an example. BlockFi is a centralized exchange. Also, Coinbase centralized exchange. They allow you to borrow against your assets also. But these exchanges, you know, just like we seen yesterday um, with Celsius, they're able to lock up your assets and not allow you to move them or withdraw them or what I'm saying, or even deposit if that's what they wanted to do. But you know, they likely not even block you from being able to deposit because they want to accumulate as much as they can possibly to back what they already have, right? So there's a lot of risk, and I'm gonna get into the risk of both of these, right? Now, most of the centralized exchanges, to some degree, they have some type of insurance, um, some type of insurance. It may not be full covered, but there's some form of insurance that they utilize to kind of protect you. But on the decentralized finance side, there's there's no insurance, there's no FDIC or anything like that to insure your assets, which that's a risk also. And I'm gonna get into that a little bit more deeper, but that's the gist of your centralized exchanges and what they are. With the DeFi side, like I said, my preferred method of borrowing against my assets, I use Aave. It's one of the most proven, well-rounded, you know, decentralized platforms that are out there, right? Um, it's been battle tested. I've not known of Aave having any exploits. Knock on wood, because I still got my money there. Uh, so, but there's other platforms like Aave, like you have Compound, you have MakerDAO. So there's a few more, and I'll show those examples shortly too that you could utilize or try to use. I've not used them personally, but like I said, Aave is my uh, preferred exchange that I use for borrowing against my assets. So let's keep rolling though. Any questions about decentralized or centralized exchanges or platforms relating to crypto loans? All right, let's keep rolling. And like I said, if y'all got any questions, feel free to unmute because I don't have my sidekick with me right now to keep me in check with the chat. So feel free to unmute if y'all have any questions or comments. If y'all know anything about these crypto loans, and you're already utilizing them also, like if you want to chime in and speak on it, feel free to do so. Like I've been doing this for roughly now like 7 months. So with me doing it for 7 months, I wouldn't call myself, a expert in the process right now. So if you have some input, feel free to drop in that input. I appreciate it. But let's keep moving. All right, so the benefits of crypto lending, right? So in comparison to your conventional loans, right? Um, in some cases, whether it be, a car loan, mortgage, or something like that, like you have low interest rates. But when you look into like credit cards, or you look into, some of these other crazy loans that you can get, they're typically above, uh, or they can be above 10% that you'll have to pay that in interest back. Majority of these loans for crypto, they're typically below 10%, um, which is great for a asset that has the ability to appreciate, right? Um, Now with the dollar bill, when you borrow dollars, that dollar doesn't appreciate when like that dollar is gonna stay $1. Whether the things around it go up or down, that dollar is gonna stay $1. Um, so when you're borrowing um with crypto assets, these assets can be $1 today and be $5 tomorrow. So you're dealing with assets that are appreciating and or depreciate. Like you have the benefit or the detriment of both. Um, but you just keep that in mind. So you have these rates that are typically below 10%. Um, and then here you can borrow up to 50% of your portfolio's worth, which I mentioned earlier. Um, and that's primarily on the centralized exchanges. You can only borrow up to 50%, which is a protection to the individual and the exchange itself, because they don't want to be too over leveraged. But as you can see with Celsius, they likely have been over leveraging to some degree, and that's why they in a bad place right now, right? But on these decentralized exchanges, you can literally borrow up to 90%, and that is a very high risk, saying high risk thing to do, to put in, say, 10 or $100,000 worth of crypto, and then you go and borrow 90,000. Like, you find yourself running the risk of being liquidated if that asset falls in value, right? So that's something to keep in mind. um but you have that ability to borrow a significant amount of what your asset value is in total. Somebody unmuted. um if you had a question, feel free to ask that question. So right, and then the next thing, you can acquire your loan in US dollars, which you can only do this on the centralized exchanges. You can't do that on the DeFi exchanges, right? On the centralized exchanges, you have the possibility of getting flat out cash or specific cryptocurrencies, right? On the DeFi exchanges, you can only get cryptocurrencies, whether it be a stable coin, Bitcoin, Ethereum, or whatever cryptocurrency that they allow on that site to be borrowed against, or used on that exchange. So, and like I mentioned before, it's a credit check free. Like, no one's gonna come and say, "Hey, you need to have a 760 credit score to borrow against your own assets." Like, no, there's no such thing of that. Um, there's nothing you have to deal with relating to that. So there's no form of credit checks when you're borrowing against your assets in crypto. So keep that in mind. That is major. Like, no discrimination at all in crypto when you trying to borrow against your assets. As long as you got the asset and the amount, the minimum that's required, like, you can do it. You can do it today, and you will get it on. I know for a fact, like I said, because I only use Aave. You can get that loan immediately. On some of the centralized exchanges, I've read that it may take some time, but it's nothing like trying to get a loan um, in the conventional way. You know, you have to go through a process. You're not likely going to get that loan in the same day. Like you have to be approved. They may send you a letter in a week to confirm your approval. So there's a process, right? Um, and I just mentioned this here, quick money. Once authorized, you can access those loan funds almost immediately. And that's a fact. Like I've seen it happen, right? Um, Many crypto exchanges provide interest accounts that let you lend crypto and earn high APY up to 10%. This is a fact. So this is a plus here. Um, I'm not certain on the centralized exchanges how this works or if this is a thing, but it likely is. This crypto, it would not surprise me. But I know for a fact, on top of um, you know, putting your assets onto these platforms as collateral, you yield interest off of it. You also have to pay a certain amount of interest, but you yield interest also. Um, so it kind of counteracts itself, like on an annual basis, right? Now, I'm not sure if it's in here, but I'm gonna mention it now. So on these centralized platforms, like I said earlier, they require um they require some form of a lockup period, right? Where you have to keep your assets in place, um, or you have to pay back the asset in a certain time frame, right? On the exchange that I'm gonna show y'all, the Aave platform, there's no time limit. Like you know how you go get a car loan and you may have 84 months to pay it back or whatever, and it has to be timely every month. No, it does not work like that in decentralized finance. On the Aave platform, there's no time limit to pay back that loan. Like it can be 50 years from now, and they not gonna be sending you a letter saying, "Hey, we're gonna report this to the creditor." Like what occurs is, like I said, you have uh interest that you have to pay. So annually, you have interest that you have to pay, or like it calculates likely on a daily basis, but um, you have to pay back a certain amount of interest as long as your assets are sitting in there. But like I mentioned before, like the last line here, once you put your collateral into one of these DeFi platforms, like you can yield off of that. Like it says here, up to 10% yield from just putting your assets there. So you'll get more assets back for just doing that. So it kind of like balances out to some degree, right? So you can use your interest that you gain to pay off that interest that it costs to maintain your loan in there to some degree. That doesn't always like line up completely, but you have that added benefit, right? Does that make sense to everybody? And I got a question in the chat. Oh, just okay. Appreciate it. That makes sense. Y'all, please give me some ones in the chat. If everything so far has made sense, just drop some ones in the chat. Appreciate it, Nelly. Um, more Jaquel, appreciate it. Can you please go over the paying interest part one more time? Sorry, no problem. I'll go over it again. Cash one, appreciate it. So, like I mentioned, when you deposit into these platforms, like they're not just going to allow you to borrow against this asset for free. Just like any loan that you take out, like you have to pay that loan back plus interest, right? Um, so it's the same concept here. Like you have to pay the loan back plus interest to some degree, but that interest that you pay, like it says up here, is typically under 10%, right? Um, which you could view that as high if it's at 10%. You could view that as high, but you know, you have to also factor in say that you borrowed against a loan on Bitcoin, right? When Bitcoin was $3,800, right? And it went up to 60 something thousand dollars a coin, right? You I'm not even gonna dig into that yet because I do want to specifically talk on that. Let me just tell y'all about what she just asked. So, like I said, with the interest, you just like a conventional loan, you have to pay back that interest. I am gonna touch on what I was about to talk about, but I got it like further along into the class. Um, but like a conventional loan, you have to pay that interest back. But on top of that, when when you put your assets into this platform, you also yield off of it, meaning that you earn something for putting your assets onto this platform also. And like it says here, you can earn high APY up to 10%. So it kind of counteracts this that you have to pay that could be up to 10%, right? If that makes sense, Pam. Did that make sense? Oh, I see the eyes. Give me give me a thumbs up, Pam, if that makes sense to you. Or give me some ones if that makes sense. Have it may be for you. My mama named Pam too. I like that name. That works. Naj, appreciate it. Appreciate it. All right. Cool. Let's keep rolling then. Pam, if you got any questions, just feel free to drop them. And we'll keep rolling. All right. So these are key things to consider before borrowing against crypto assets, right? You can look at them as pros or cons, however you want to see it. But the most significant thing is a margin call, right? So on these platforms, they have different ways to measure if your asset um, is healthy. Like if your loan to value ratio is healthy, meaning if if you borrowed 90% of your collateral and that asset that you borrowed against has just dropped 50%, you likely gonna get a margin call because the value has dropped so much, right? To counteract that, you need to do you need to do possibly a couple things. You need to either add more value, meaning you need to contribute more to the platform to balance out, or you need to pay off that a portion of that loan to kind of make yourself more healthier, like you have a more healthier setting. Let me see somebody. Okay, cool, cool. Yeah, my mama, she is a lovely person. I love her to life. So, oh, go back. So, but that's the most concerning thing that you have. You have to stay on uh you have to stay on understanding like what your assets are doing when you borrow against them. Like you need to, maintain awareness of if the value is increasing or decreasing at a significant rate. Like a lot of people that are a lot of people that borrowed against their assets, like they're likely being liquidated right now because of the price of these crypto assets dropping significantly. But I'm gonna show y'all a trick on the platform that I use to counteract that. Um, so you don't really have to worry so much about being margin called to some degree. But I'm gonna show y'all how to work around that. Like it's beautiful. I'm gonna touch on it though. So the next thing is assets unavailable. So as long as your debt is outstanding, you can't trade or transact. And I mentioned this earlier. So when you put your assets into a platform, right? As long as you have them there and you haven't paid back your loan, you cannot remove them. On centralized exchanges, like you don't have the ability to do anything once they're on there, right? You can't do some of the functions which I'm gonna tell y'all about, where you can swap an asset for another asset to make that to kind of give you a healthier credit score to some degree, what I call it, because it's called different things on different platforms, but um you don't have the ability to do something like that. So, but on these DeFi platforms, you have the ability to do so many more things that allow you to, you can't move your assets off the platform until the loan is paid, but you have the ability to swap to other assets that are either stable or performing better, which is a game changer. I'm gonna show y'all how to do that. The next thing, you have variable repayment terms, right? Depending on the crypto lending program, you may have less than a year to repay the loan. You can create your own payment repayment plan with shorter payments, with shorter repayment terms, and know if you can afford the payments, right? So that's primarily on centralized exchanges. Like I mentioned, on Aave, there's no term. Like, you can literally ride out for 100 years, long as the platform is still available. There's no terms. There's no deadline that you have to pay back this loan. You just have to ensure that you maintain a healthy credit score. And I'm calling it a credit score because that kind of just like it's named different things on different platforms, but you have to maintain a healthy credit score or loan to value ratio um to maintain your assets on that platform, right? So long as you're in the green and your assets ain't went to the red and you starting to get liquidated because the value, your assets have depreciated in value and the interest is eaten up, being eaten up, then you good. You can hold that on the DeFi side. You can hold your assets in there as long as you have a healthy credit score. Like, there's no, terms. Like, you have to pay back by this certain time, which is major, 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 right? The next thing, not all assets are eligible, right? Just because you have $1 million worth of Shiba Inu, like, most platforms don't allow you to borrow against Shiba Inu. Like, it's not a thing. Like, they primarily allow you to borrow against assets on credible exchanges. They allow you to borrow against assets that are deemed, safer assets. Like, these are assets that provide some form of utility. They view them as being an asset that will sustain uh, for for a very long time. They're bear market proof to some degree, meaning they won't go to zero and never come back from zero, right? So yeah, most assets, not all assets, are eligible to be borrowed against. So you just have to identify what platform you want to utilize and see what assets they will allow you to borrow against, and pull your assets there to borrow against them. So that's, oh, my fault. Go back. Yeah, so that's key. Just make sure you understand that not every asset can be borrowed against. Uninsured funds, like it says here, crypto interest accounts aren't insured. If you lend your own digital assets, unlike bank accounts, you could lose everything if the exchange fails. Celsius. I do not see Celsius surviving this little stint that they pulled the past day or so. I don't see people having confidence in an exchange that locks up their crypto like that, and especially crypto that's a vast amount of crypto that's being borrowed against or leveraged to some degree, right? I don't see that exchange surviving. So I'll tell you what's happening currently. And like, I know some people who borrowed against crypto on Celsius, and like, they can't do anything. Um, they can't do anything. So like we were talking about earlier about margin calls. So you you can deposit more to try and like better your credit score or improve your health score um when you deposit on Celsius. But do you really want to trust them with your assets when they're not going to allow you to remove them? So a lot of people that don't trust them to some degree now, they're just going to watch their assets be liquidated. Like they're going to get margin calls because now they can't withdraw any of the assets that they have on that platform. You do not have this issue on decentralized exchanges. They have no ability to lock up your asset. They have the assets that they can't lock up is the ones that you haven't borrowed again. Let me say that again. I confused myself. So the assets that you've already borrowed against, that value, yeah, that's locked up until you repay the loan. But then you have assets that you have not borrowed against. So say you did 50% of, or say you did 25% of the collateral that you provided to Celsius, and you still have 75% that you have not withdrawn, right? They will not allow the people that's on this exchange right now to withdraw those assets, which in turn, that 25% that you have in there that's being, depreciating in value over the past few months, and the fact that you may have not added more liquidity to it for whatever, like if you did 25%, likely you kind of healthy. But for those people who did 50 or 90%, borrowed against those assets up to 50 or 90%, like they likely gonna get liquidated. Like they're gonna receive a margin call, and there's nothing they can do about it by withdrawing to protect themselves or swap to other assets. Like they have nothing, nothing to protect them. And like I mentioned, with decentralized platforms, like they're uninsured also. Like you don't have they're uninsured completely. Like there's no call center that you can call and be like, look, this exchange, this platform died and I can't get my assets out. Like I can't get the assets that I have, or I can't pay onto the loan to get the assets that I had on this platform. Like you won't have that ability on decentralized platforms. Now you still to some degree would be able to get the assets that aren't um borrowed against, but that's like a higher level in which you would have to do so, and going onto the blockchain to do that, right? But that's it for the uninsured funds concept. Like they're not insured, so you run the risk of having issues like that, specifically like with Celsius. Like I've not seen any platforms that are decentralized that have been that have had issues like Celsius is going through though. Interest withdrawals can be slow. So this is a fact on centralized platforms. So like I said, you can yield interest from depositing up to 10% on most of these centralized or decentralized exchanges that provide borrowing opportunities, right? On centralized platforms, it can be slow. Like they may say, all right, you can take this interest from this crypto in a day or a week or something like that. I don't know what it is, but it can be slow over there because they have different processes to go through. On decentralized platforms, nah. If you want to withdraw what you've gained in interest, you can do it today, this minute, this hour, and you'll have it in your wallet immediately. So that's key right there. But these are the 6 things to consider when borrowing against your crypto assets. And like I said, the key thing is you want to avoid having a margin call. You want to avoid being liquidated of your hard-earned paid assets put onto this platform. And you want to mitigate that in any way that you see that you can do so, right? And like I said, I'm gonna show y'all how I do that on the platform that I use. But let's keep rolling. Does all that make sense? Y'all give me some ones in the chat if all that makes sense when considering borrowing against your assets. Appreciate it, Nelly. Appreciate it. Got the one, got 111. Yes. That's the angel number. Keep the ones coming. Keep the ones coming. Now, if you don't understand, put a 0. If it ain't making a lick of sense, put a 0. All right, cool, cool. We got enough ones in there. All right, let's keep rolling though. All right, so so choosing platforms for crypto lending, right? So key thing, make a list of items to consider before looking at crypto loan platforms. Before picking a crypto loan site, consider these factors. Like we mentioned before, consider the interest rate in which you have to pay back. So if you borrow against an asset and they say the interest that you have to pay is 50%, nah, you say no. On any, I don't care where you at, whether it's on a car, a house, like I doubt anybody would even do that. But yeah, you don't want to pay back some crazy interest rate, even on an asset that can appreciate 100 times from what it's worth today, right? You still don't want to have to do that, right? So ensure that the interest rate is considerably, low to some degree. And then the next thing you want to consider the cost. So evaluate how much crypto assets cost on each site while choosing the best crypto loan platform. So on some of these sites, the you can swap for crypto on there, or you can purchase crypto and then deposit it to be borrowed against, right? So before you do that on that site, make sure it's not cheaper on another site. Like if you wanted to go buy it on Coinbase or FTX.us and then move it to this platform because it's cheaper, like consider other uh ways because you could save a buck by doing so. I personally use Qcoin to move my assets to borrow against because it's the simplest way and it's one of the fastest ways for me to do so, right? Um, then you want to consider the platform's risk, right? So before you choose a crypto lending platform, you should always also think about the risks that come with it. And we covered the risks pretty thorough earlier. Like I said, none of these platforms are insured. That's like the first major risk, right? So you're taking a risk by participating, right? But um and like I said, with these centralized exchanges, you you come to somebody just chimed in. Yeah, so with these centralized exchanges, you have that risk of them locking up, your assets from being withdrawn or deposit or whatever, right? So you have that risk. So consider that if you wanted to go the centralized way because you are more traditional and you don't want to deal with being a sole custodian. Now, I wouldn't recommend borrowing against assets on a centralized platform because, like I said, to some degree, they do insure some things or your assets to some degree, but I don't think they'll cover everything. On the decentralized side, it's not insured. It's not. So that's the biggest risk there. Then you want to consider the loan length, right? When looking for the safest crypto lending sites, consider loan length. Determine if the loan's length is fixed or can be adjusted based on your demands. So primarily you'll see this on centralized sites. The centralized sites, they have 60, 90, 180 day, a year, maybe 5 years, 10 years. I'm not sure. But they have lengths that you have to pay back that loan. On most of the DeFi platforms, there's no term, like, which is beautiful to me. They don't put you in line with saying you have to pay this back by this date. You have to pay this amount back every month. You just have to maintain a healthy uh credit score, a healthy health score on these platforms, right? So then margin. When choosing a crypto lending site, consider the collateral you require. So on the, like I said, on the centralized exchanges, you in most cases, there's a minimum amount you have to deposit, right? Now, some of the decentralized exchanges, they require a minimum amount too, but the one that I use, Aave, I'm not for certain what the minimum amount. The example I'm gonna show y'all today, I'm only gonna deposit like $100. So we're gonna see if that works. But I don't believe it's a very I don't believe there's a minimum amount to some degree, but we're gonna try $100 and I'm gonna show y'all how that looks and how I actually do it, right? Um, and like I just mentioned, deposit minimum. When choosing a platform, you shouldn't consider the deposit limit. Check if the platform has minimum deposit requirements, and that's what I just covered just now. Um, like I said, most centralized platforms require a minimum deposit, and then the decentralized ones typically, to my understanding, do not require a minimum balance. But we're gonna find out today. I got some in the chat. One, yes, it's everyone who's seen it. Make a wish. Yeah, it is. Yeah, make a wish. Certainly, we got them triple ones in there. See more. Thank you for doing this. I appreciate y'all tuning in with me. I have so much information that I store in my brain relating to crypto, and I really need an outlet. So I appreciate y'all just listening to me. Y'all literally, honestly, don't have to say a thing if y'all don't want. I'll just, do a brain dump on here and give y'all whatever I know. I don't know everything, but whatever I don't know, like I continually like try to learn, and I try to, give back to people that are willing to learn what I know also. So yeah, most definitely. Whatever I learn, I'm trying to give back to y'all and anybody that's willing to listen to the benefits and the opportunities that we have here, because some of these opportunities in the crypto space, you really only see these opportunities when you have amounted like a large amount of wealth, right? Like you don't have what I'm saying, you don't have the ability to do some of the things um in a conventional way when you don't have a significant amount of wealth, right? So, but in crypto, like most people don't have the ability to have like high yielding savings accounts or something along those lines, right? Because they typically have like a minimum balance that you have to put in there, right? But in crypto, you can do practically the same thing, and we call it staking. And you stake your assets, and you can yield a interest that's far beyond what a high yielding savings account. Now it's a little bit more high risk, but with great risk, you can attain a
good
great reward.
rewards.
Yeah. So,
Oh, sorry.
oh no, you good. Who was that?
It's Ray. I didn't know my computer went on mute. I'm sorry.
Oh no, you good. You good. Chime in when y'all want to, man. Like I don't mind it at all. Like I certainly like to know y'all thoughts as we go through these classes. But we're gonna keep it rolling. Keep it rolling. And like I said, that was, key things when choosing platforms for crypto lending / borrowing. All right. And these are the top lending platforms or crypto loan platforms. Like I said, at the top is the one that I primarily use for DeFi is Aave. But then you have Abracadabra, which is, I believe on Abracadabra, they allow you to borrow against their token, which is called Magic Internet Money, MIM. And then Mango is a platform that's on the Solana blockchain that allows you to borrow against assets on Solana. And then Compound is very similar to Aave, and MakerDAO is similar to Aave. I've not used those two. And then on the centralized finance side, you have Celsius, you have Nexo, you have BlockFi, you have Unchained Capital, you have Binance, you have, I think crypto.com may allow you to borrow against. I know Coinbase does. Like, so there's a ton of platforms out there on the centralized side. I just personally don't recommend them because there's better opportunities when you use DeFi platforms. Like I said, both of them are high risk. And I didn't mention this before, but like I say all the time, this is not financial advice. These are things that I do or I'm participating in. And if y'all choose to do so, just keep in mind, always keep in mind the risk. Crypto is very risky, is very speculative, but we can't avoid and not see the opportunities like this blatant in our face. There is risk, but like I said, with great risk comes great reward. But these are the top platforms that I know of. And like I say, my platform that I utilize is Aave. And let's keep moving. Oh, we're about to get into it. All right, so let's do a practical exercise, right? So I'll tell y'all what I've done up until this point, right? So on the Aave platform, in fact, let me just go to it real quick. On Aave, go back. No. Stop it. Okay. On Aave, right? Let's get to it. Connect my wallet. So up until this point, right? So on Aave, you have the ability to borrow against assets on multiple blockchains. Like it says here, this is the Ethereum market. Can y'all see my screen still? Anybody just unmute for real quick.
Yes.
Just let me. Okay, cool. So on Aave, you have multiple blockchains that you can borrow against assets. Like here, you have the Ethereum blockchain, right? And you can borrow against, or you can supply and borrow against all these assets that are listed here, right? I personally do not, well, actually, I do have an asset that I have sitting on the Ethereum Aave platform, but I've yet to borrow against it because I was early on when I initially tried to do this and I realized how high the gas fees were, the transaction fees. I was like, you know what? It's not worth it right now because it wasn't a lot of value to even want to borrow against, right? But you have Ethereum, you have, let's see, show you right here. So you have Arbitrum, you have assets on Arbitrum, Avalanche, Phantom, Harmony, Optimism, Polygon. I personally use Polygon. And I use Polygon because the transaction fees are little to nothing to transact with, right? So let's see. So we're gonna switch to Polygon, but we're gonna go to the V2 markets because that's what I utilize, right? So now that I explained that, I'll tell y'all what I've done up until this point. So like I said, when I deposit assets to the Aave platform, what I do is I purchase or I'll send crypto to the Qcoin exchange, and then I'll swap for the Matic token, right? I'll swap for the Matic token. But when I swap for it, and then I send it from Qcoin, I ensure that that Matic token is the Matic that's built on the Polygon's blockchain, right? When you're on Qcoin, and I will show y'all this, but y'all will see all of my stuff on Qcoin, and I can't be doing that, right? But on Qcoin, when you withdraw your assets and you're withdrawing Matic, right? When you can y'all see my mouse? When you see the emblem looks like this means that that asset is on the Ethereum blockchain. That is the Matic version that is on the Ethereum blockchain. When you see the Matic that looks like this symbol, that is the Matic that's on the Polygon blockchain. You want to make sure you have the Matic that's on the Polygon blockchain when withdrawing it from Qcoin to your decentralized wallet. The decentralized wallet that I utilize.
Can you repeat that again? With the, you said that M is on the Ethereum.
Yeah, so the logos, right? And this is, I'm just trying to make it so you can easily identify this if you did the same thing. Now I have these steps written down, and I post them in the Discord before. I'm gonna post them after this class. But to key in on, when you're on the Qcoin exchange, right? This emblem here, if it looks like this, that is the Ethereum version of Matic, right? You don't want to.
Would that be considered wrapped Matic or no?
To some degree.
Okay.
It's just it's just not like you'll see wrap Ethereum or wrap Bitcoin, you'll see the W before. It's practically the same thing, right? But this one just lives on the Ethereum blockchain. You want to have this one with this logo. So when you go to withdraw and it asks you which network you want to utilize to withdraw, choose the Polygon network. So you're gonna withdraw from Qcoin the amount of Polygon that you swapped for, and you're gonna deposit that into your decentralized wallet. The decentralized wallet that I utilize for this process is the Trust wallet. And like I said, I have all these steps in already written down, and I'm gonna post them in the server. So, but continue to ask questions as I go through, right, to keep me on track. So once I've deposited that Polygon into the Trust wallet, now the next thing that I do, I go to this website called quickswap.exchange, because now I want to swap that Polygon into a stable coin. Can y'all still hear me? Because it says my audio quality is bad.
No, I can still hear you.
All right, cool. So then I want to go and connect my Trust wallet to this quickswap.exchange, right? So I'm gonna connect my wallet, hit wallet connect, and bam, I'm already connected. You can see up here I have 230.6 Matic, which a few hours ago that was like $100. If the market went down, it might be at $80. I don't know. So now, right now, you see here it's showing that emblem as if it's on the Ethereum blockchain. That's not it on here, but it's viewing as if it is that version. It's not. But I emphasized on that because on the Qcoin exchange, if it pops up and looks like this, that is not the Matic that you want. Here, don't even worry about it, right? Because you know you have the right one. So what I'm trying to do now is I'm gonna swap my Matic for a stable coin, because that's what I want to deposit onto the app to the Aave platform, right? So I'm gonna come here, I'm gonna select the token, and I'm gonna swap to USDC. And I'm gonna hit max, but I'm gonna actually take some. So I done lost $8 in a couple hours because that was $100. So what I'm gonna do is, because you have to keep a few dollars in there worth of Matic in your wallet for transaction fees. So instead of using 230 Matic and swapping it, I'm gonna utilize, let's say 225, so I can ensure that I still have enough Matic for transaction fees, right? And that's gonna give me 88 bucks worth, roughly, right? Okay. Only possible to place sell orders above market rate. What do you mean? I ain't never seen that. I ain't never seen that. Oh, y'all playing with me now. So if this doesn't work, I'm gonna do this on my phone. And then we're gonna go to the next step. But matter of fact, I'm gonna do it on my phone while we sitting here. Because I don't want it to hold us up because I've never seen that error before. But let me do it on my phone real quick. So only possible to place sell orders above market rate. Well, fix the market rate. So let's keep on going though. If y'all got any questions though, go ahead and fill them in while I do this. And somebody unmuted right now. These people invest based on doomsday. Oh, well, everyone will invest in it doesn't. They're always like, preaching about this, preaching much money, and it's the ruin of the economic system, things like that. That's like almost everybody feels. All right, Daddy Tone, I had to mute you, bro. But if you got any questions, anybody, if y'all got any questions while I do this real quick, I'm gonna do this in the background, so because I'm not sure why it's doing it on the website here like this. But if y'all got any questions while I'm doing this, feel free to ask, even if it's about anything that I covered so far. And I'll inform y'all about that. Let me see, let's get this thing done. Yeah, see on my phone, no problems. And y'all probably gonna see this update shortly once it confirms on the blockchain. Yep, see, we already in there. So I'm gonna refresh this and it's probably gonna update. Let's see, go ahead and connect my wallet again. All right, so yeah. So I did it on my phone and y'all can see now I have $90 worth of USDC. So what I'm gonna do now, right? Now that I have the amount that I want to deposit into the Aave platform, now I've already done a swap. I have at least 5 Matic. I'm sure that's probably like $2-3 right now. So that's enough to cover my transaction fees. I'm gonna go to the Aave platform and I've already selected the Polygon network. And now these are my assets that I can supply to the blockchain to be borrowed against. So as you can see here, I got USDC and I have Matic. I'm not going to deposit the Matic because I need that for transaction fees, right? So my USDC though, I have $90 worth. Here's that interest that I'm gonna receive, which is little nothing for USDC, 0.79%. And then for Matic is that 1.15%. Remember we was covering that before. And then over here, remember when we were covering what you would have to pay back as far as like the interest that you would have to pay back? These are the rates here, what you will pay back based off of these assets that you can borrow. So we're gonna go through the process now of supplying my collateral, which is this $90 worth of USDC. So I hit supply and we're gonna do the max. And all right, so I'm gonna hit approve. And the fact I'm doing this on my laptop, on my computer, you have to go back and approve this within your DeFi wallet. So I wish I could show y'all this, but it'll pop up and it'll say smart contract call, and you just approve the process and hit continue. So now you see that it's approving on the website because I connected it to my wallet on my phone, and you got to give it a second for it to confirm on the blockchain. Right.
I have a
So,
question.
go ahead.
Okay, with the way the market is right now, would I have been able to use, to buy pneumatic and then do the same thing that you're doing now, or
Yeah, yeah,
do I
yeah.
have to wait till it's up a little bit?
But what do you mean? Are you able to get? You certainly can do this. You certainly can do this at any point. You could have done this when Matic was significantly higher, but
Okay.
the ideal time to do this is when everything is extremely low, right? Because what occurs is when it goes back up, and I'm gonna show y'all this too, but when the price goes back up, this is the game changer that you have when borrowing against crypto assets that you don't get in any other like market or any other loan. So this collateral that I deposited, right, was $90 worth of USDC, right? So on this platform, I'm going to show you, I can swap this USDC that I deposited for any of, this thing should have approved already, but excuse me, I can swap. Let me make sure I didn't have to do anything else in this wallet. So I can swap this USDC for any of these other crypto assets that are listed over here that I would want to borrow against. Now, USDC is a stable coin. The value doesn't appreciate or depreciate significantly, like it's stable. It stays roughly at $1, right? But these other assets that's over here, like wrapped Ethereum. So if Ethereum was at $100, right? And let's say Ethereum was at $90. I had $90 worth of USDC. I swapped that USDC for Ethereum. Ethereum then goes, it will say then I borrow $45 worth of that. I borrow $45 worth of that $90 worth of Ethereum, right? So I'm I'm at 50% of my borrowing rate, right? Now Ethereum goes from $90 to 4,500 or 4,600 where it was at the highest, right? Now that collateral that I initially deposited that was $90, I can pay back that loan, which was only what? It was only $90 worth or one Ethereum worth. I can pay back that loan with the asset that I initially deposited. I don't have to take anything that I had or any asset that I purchased from borrowing it to pay back that loan. Or I don't have to come out of my pocket again to say, all right, I have to go pay this loan off. The collateral that you have on the platform, if it appreciates significantly, you can use that same collateral to pay off your loan. Does that make sense? Like I need to get ones for that because that is major.
I'm confused. Can you?
All right. I'm gonna say it one more time. So
can you dumb it down a little bit? Dumb it down a little bit.
all right. So look. So I'm not gonna go through all the steps again, right? So you say you didn't put USDC in here, right? Say you put Matic in here, and Matic is I deposit like I put USDC because this is what I normally do, right? But say you put Matic in here, and Matic was at 10 cents when you initially bought it, right? You bought $100 worth. Now a year from now, Matic is at $1, right? But you borrow against it. Say you borrow 50%, like I just said. That initial amount of Matic that you deposited in there, you can use that collateral that you had in there to pay off that loan. Like I
okay, I see it because when it goes up to $1, you could use. Okay, I get it now.
You can use that same collateral to pay off your loan. You can't do that in any other market. Like you can't go right and take a loan out on your house, and just because the market value has increased, you can then take value from the market value increasing and paying off your loan. You can't do that anywhere else. That's why I say that concept that you have here in crypto, you won't find anywhere else. Anywhere. Like there's nowhere else that you could do something like this. So that is a game changer. When I learned that, I was like, I should have been doing this years ago. Right.
So basically, let's say if it goes up, then basically the fact that it's going up means that you don't really have to pay it back out of
pocket.
Am I saying it right?
That is a fact. The only thing that you have to do is maintain a healthy credit/health score. So your loan to value ratio must be aligned. You must stay in the green. So you have to ensure that you don't get a margin call or be liquidated to some degree. So, and I'm gonna show y'all what that looks like. This thing, let me stop this. Let me see if it actually approved. Because it should have approved by now. All right, let's go back. It should have did it, but it didn't. So let's try this again. And if it don't do it here, I'm gonna do it on my phone because I don't ever do this on the website. I do it from my phone. You could do all this from your phone. Oh, okay, it did approve. It just now it's allowing me to supply. So it's probably gonna prompt me to do something on my phone again. Maybe, maybe not. So once it supplies the USDC to the platform, after that, then I'll be able to borrow against it, right? And based off of my wallet, look like it already happened, but I'm gonna confirm that real quick. Make sure. Okay.
What platform you using?
Aave. Yep, Aave. So for whatever reason, it's not processing here. I'm gonna do it from my phone like I just did on QuickSwap. And then I'm gonna go to the next step and show y'all how to actually borrow. And then I'm gonna show y'all how this other thing that I do to kind of like ensure that my health or credit score is stabilized. Like moving from these assets that have the potential to depreciate or appreciate, like you can practically trade within this platform to some degree. So, and I've been doing that. So what I'll do is, if man, that's a little bit advanced. I don't want to go there because I don't want to confuse y'all. But I do want to show y'all now because it's been deposited. Oh, let me sign back in. Hold on. All right. Okay. All right. So I'm back in there. So now it's deposited, right? It's no longer here. Asset that I will have to supply here. But now, let's see. It should have popped up here. See, y'all bear with me because it's weird on the laptop versus the phone. But once you've deposited, this should be available to be utilized, right? But let me play with something real quick. Let's go to the classic. I'd much rather utilize a classic. Now, let me check the chat real quick. So, all right, cool. Isn't Abracadabra with Time Wonderland? Yeah, they were affiliated to some degree. But and yeah, Wonderland Time, yeah, that was that's a whole nother story. That was some drama filled stuff with that dude that was a scammer. What are V2? V2 is so on Aave they have three different versions in which you can utilize this platform. And I personally use the version 2, which it was an upgrade from the original version. The original version only allowed you to deposit on the Ethereum blockchain, but people realize like, yeah, I don't really want to use this because like Jaquel said here, them gas fees though. Yeah, because the gas fees. So the version 2 allow other blockchains to be utilized. And that's when Polygon came about on here, where you practically don't have any fees to some degree. Like it's very small, like under $1 always. I use Polygon Faucets. That's dope. You have to tell me about that. How do you short crypto? Sorry, I'm late. So Daddy Tone, we talking about borrowing against assets, but you can short crypto in multiple ways. Like you can trade futures on KuCoin, I believe Bybit or BitGet. Um, those are platforms that are, you know, constantly discussed in the Discord server. I personally trade either on KuCoin or I trade crypto and short it in the Forex market on MetaTrader 4. So like my preferred way is most of the time I trade it on MetaTrader. Um, that's just because I like to get in and out quick, and I don't know, it's just my preferred way. Let's see. Let's see. Oh dang, where all those questions go? Oh, okay, yeah. Yeah. So I never, yeah, Jacque, I never got into Wonderland Time, but I was in Ohm. I was in like 4 of those different platforms that were like that. But yeah, Wonderland Time was something else. So all right, now we on the classic view. Let me go back to the polygons. Yeah, that's the right one here. All right, so let's see. My dashboard. That's where I want to go. Connect again. Tell me y'all gonna have me do this again. 1 second, y'all. Y'all bear with me. All right, so I already deposit. Why y'all playing with me today? Yeah, they playing with me. Aave version 2, that's V2. Y'all bear with me. They playing with the kid. All right. Let me make sure that everything is right from my phone. Y'all give me 1 second. Cause like I say, I primarily utilize, you know what? I did it on version 3. That's my fault. That's what it is. Yeah, I did it on version 3. So we're gonna redo this. Go back. All right, one more again.
Oh, sorry about that, dude.
Oh, you good. All right. That's my fault, because I thought it was on V2. But yeah, we on version 3. I swear I did it on V2, because I did not have this option. for whatever this is. I haven't even used the version 3 yet, but cool. If we on version 3, it's practically the same, right? So now I've supplied that $90 worth of USDC, and now I can come over here and borrow against that USDC with any of these assets here, right? So I don't even know what this AG Euro, that's something new. That's something new. So, but what we're gonna do is we're gonna borrow, let's borrow, well, we're gonna borrow some more USDC because say I wanted to go buy some more Matic. Yeah, could you please mute? All right, so the max that I can borrow from that $90 is $74.36. Now, in doing that, remember I was telling y'all about a health score or credit score? So anything below, this is key. So take this in your notes. Anything that's near this range is in the red. Like you're over leveraging or over weighting your borrow to some degree, right? So you don't want to come in here and borrow that much because you run risk of being liquidated. Yeah, you can get out, 80 to 90% of what you put in, as far as your collateral, but you run a risk of not being able to protect that asset that you currently have in there. The key thing is to keep what you borrow and also keep safe what you have in collateral, right? So we're gonna drop this down to improve this health score. So your health score, anything below a 1 is when they start to liquidate your assets. Like they won't do it all in one swoop. They're just gonna pay back. They're just gonna take from your collateral in which what you need to pay back to maintain your health score above 1. So they won't just come in and be like, all right, yeah, you didn't drop below 1, we taking it all. And then you looking sick because of that. So we're gonna drop this to say 50, right? And you see my health score improve. Now it's roughly in the yellow and we at 1.53. So that's a decent health factor. Like you can pretty much sustain like a significant dump in the crypto markets. Like if Bitcoin dropped to 15,000, you probably won't get down to under 1 with the health score of a 1.53. You pretty safe, right? And then we drop it down. Say I only want to borrow $25 worth. I got a great health score. There's practically no way that unless Bitcoin and the whole crypto market went to 0, my health score is perfectly fine. So what I'd recommend, if you're borrowing against your assets and you want to be very safe, I can't, tell you what to do. Oh, wow. I just got an alert. Bitcoin is below 21,000. Y'all don't mind. And my my trades right now, I know they look beautiful right now. Bitcoin just hit 20,933. I just need to tell y'all that real quick. So, but what I would recommend, right, when borrowing against your assets, think of it in the same sense that you do with maintaining your credit, right? You don't want to utilize over 30% of your credit, right? That's just key. That's just like principle that most people go by. Do not have a utilization rate above 30%. So I don't know what 30% of $90 is off the top. Well, you want to keep it, that $25 was perfect, right? Like it kept me in the green. So that's under 30% of that $90 that I deposit. So that's what we're gonna borrow. We're gonna borrow $25. Borrow the $25. And now that I hit borrow, it should prompt me. Yeah, prompt me on my phone to confirm the transaction. It costs 66 cents to confirm it. I hit confirm, and this should confirm on the blockchain shortly. and I'll have my $25 to do what I want with as soon as it confirms. So we're gonna click away. It should confirm shortly, and then you'll see. Yep. So see it popped up already. So now I've borrowed that $25. I have it sitting here. You can also see it now here. Now the crazy thing is, I could come back. Now this is another. This is something I did just like on a whim, but I can come back and deposit this same $25 and supply it here. This, I'm just telling y'all, it's crazy. I'm just say that much. It's crazy and what you can utilize and do on this platform, because I don't want to confuse y'all, but that same $25 that I just borrowed, I can come and deposit in here and borrow against that $25 again in conjunction with what I already have. So I'll have a total of $115 that are deposited, and then I can borrow against that entire $115 and utilize that elsewhere. Like, it's a lot you can do on here. But now I have that $25 here, you know, so I could come back and repay it whenever I choose to do so. It tells you here also the borrowing power used, which is 33%. I said stay under 30, but yeah, it should be less than 30. If you want to play it safe. I'm not always the safest, but I manage my risk by doing all kinds of things on this platform. Let me see. Who is this? Lou. How do you feel about Strong and now Stronger? Is that Strong block? Let me know if that's what you're talking about. Pam, OMG, I've
Yes.
never seen it this low. She's Strong block. So
Yes.
I was looking into Strong. Like, remind me of what Strong is all about, because I remember the project to some degree, but I don't want to be wrong explaining it. What could you remind me about Strong real quick?
Yeah, it was you were able to like you needed to have 10
Strong tokens, right?
10 tokens to make one node, and then you would get a certain like return on your node. So when Strong was pretty high, like at one point it went up to like $1,000. So people had to pay like $10,000 to make one node, and then it went down, and it fluctuated. So and I guess that's the one that's the most kind of like certified, like around the time of Tom Wonderland and everything else. I kind of went to zero pretty much. Strong is still alive in the sense that the team is still there, still trying to make things happen. So I'm just curious of your thoughts, because it's kind of similar to what you're saying now. Different, but kind of similar at the same time. But
So
now it's Strong is like $12 now. So
yeah. So Strong is crazy because now it makes sense. There was a ton of node projects out there, right? I personally helped like develop a node like project similar to Strong, and Strong was like one of the concepts that I used when trying to build it out. Like, it required you to have 10 tokens, but in this concept we used NFTs instead of 10 tokens. But I think the concept is great. But I just don't know how sustainable it is over time, right? Because for it to all work, you have to consistently keep people coming in to fuel the people who are already there. It has, I'm not gonna call it a Ponzi scheme, but it has like Ponzi elements to it. But it can
I
work.
agree.
You know what I'm saying? So,
because
but
it
I
was
also,
working. I mean, people made the money out of it.
yeah, the people that were early, and that's typically how Ponzi like things work. People who are early, they win. The people who come late, they pay the people who were early, right?
Right.
But with Strong, I believe I read something about them developing a strong chain? Like, were they trying to create their own blockchain? Like, I could be wrong, but like I
Yeah,
haven't
I think
looked
I
into
haven't
the
really kept up
project.
with it, but they kind of just switched like a strong 2.0 with some modifications. Um, so now it's like I have some strong tokens, but I'm like, do I just sell them and take a major loss, or just go the strong route? I like make a note out of them and kind of see what happens. But the time it would take for me to get my money back, it would have to go back significantly, you know.
Yeah,
So I
yeah.
was just curious.
I'm in the same
Yeah.
boat with a few projects. Like I said, I was in Olympus DAO, um, which Wonderland Time is a fork of Olympus DAO, right? Olympus DAO was like the first of those DAO like projects. I was in a few other projects that were similar. But I can't tell you what you should do. But if I were in your shoes, I would evaluate, the strong team. Like you say, they're still building, even though the market is what it is right now. And that's a good sign. When you stop
Right.
seeing projects develop and interacting with their community and things of that nature, then that's a red flag, right? You
Mhm,
want
mhm.
to, possibly cut your losses in cases like that. But if they're still building, like there's possibility. You know what I'm saying? There's
Yeah,
potential in them
they're
still
still
building.
building. They are
Yeah,
definitely
so
still building. So
yeah, so I would consider that as a major factor. Like there's a lot of projects, like Jeff Bezos said it years ago, like, the stock price isn't a reflection of what they were building at Amazon. And this is when
mhm,
Amazon was like under $10. Like the stock
mhm.
price didn't reflect what they were actually building. Like they were doing everything, you know what I'm saying? They were reporting great, uh, you know, having great financial reports, but the stock price didn't reflect that. So if
Mhm.
you have a project that is still doing the things that they were doing in the beginning to sustain and try to build, their that project's price isn't a reflection of what they're building. So just keep that in mind. And that's what I would tell you with any project that's out there, bro. But
That's good advice, man. Good advice.
yeah, appreciate it. But we're gonna keep it moving, man. Like I said, y'all got questions, chime in. Um, like I said, um we supplied the $90, we borrowed $25. If this was a month, 2 months later, I want to come pay this off, I can come pay it off. But now this $25 is here. I can actually go see this in my wallet. Like y'all can't see it because Trust Wallet doesn't have a web version. I will show y'all that in my wallet. But now I have this $25 in my wallet, right? So what I can do now, and I don't know, let me scroll through here because this is kind of different. I say, um, oh, remember, so this is what I wanted to show y'all. So remember I was telling y'all about how you can swap the asset that you deposited. So say I wanted to protect myself. Say this was $9,000 worth of Ethereum instead of $90, right? And I've been, doing my technical analysis and I'm looking at the markets and I'm, trying to de-risk from the markets and try to protect my health score here, right? I can come here if this was Ethereum, because with it being USDC, it's stable. So I don't have to consider my health factor as much because I know the asset is not going to depreciate, right? But if this was $9,000 worth of Ethereum, and matter of fact, let's just do it. I'm gonna show y'all what it looks like, right? We're gonna swap that 90. We're gonna swap that $90, right, into Ethereum so y'all get a visual of what it looks like. Matter of fact, I'm gonna do it from my phone because I don't trust this. I don't trust. I'm gonna show y'all what it looks like after, but I don't trust this app doing what it's doing. So give me a second on the website. But I'm gonna swap this USDC for Ethereum, and then I'll explain the concept of doing so. and the benefits of doing it. Come on now. All right. All right. Swap. All right, it won't let me do it on here. It won't let me do it on my phone, but all right, I'm gonna explain it without. So let's say, like I said, instead of this being USDC, this was $9,000. So the roles will be reversed, right? This $90 is $9,000 worth of Ethereum. And I've been monitoring the crypto markets, and I'm seeing that, although I'm still in profit, my Ethereum is still in profit. Say I initially got my Ethereum and it's double since, and now I have $9,000 worth of Ethereum that I've borrowed against. And I want to avoid being liquidated. So what I can do is that $9,000 that's sitting here, I can swap all of it, part of it, to improve my health score. So to avoid the decline or the detriment that I would have from the market going in a decline, right? So say, I'm, like I said, I'm monitoring the crypto markets, and Ethereum right now is at $4,500. And this is just theoretically, right? And I foresee Ethereum possibly going down to $2,000. But I want to de-risk or take some of that risk off the table by swapping my Ethereum, which I have $9,000 worth, to USDC to improve my health score. This is one way that's major that you can't do anywhere else but crypto to de-risk your assets from being liquidated. Now, I can't show that right now because the thing is being stupid on my phone and on this platform. But what would occur is, instead of you seeing myself right now, it shows $90 that I'm trying to swap to wrapped Ethereum, my health score going down, you will see the opposite, because now they realize that, yeah, if I swap from Ethereum to USDC, I'm moving to a more stable asset that doesn't move up or down. That gives you leverage to improve your health score the whole time that you have your assets sitting on this platform. So if you're at risk, say these numbers were different here, right? Say your health factor was at 1.10. And remember, I told you, anything, like it says here, liquidation at anything below 1. And all of my collateral was sitting in Ethereum. To improve my health score, I can move some or all of that Ethereum to a stable coin temporarily until we find a bottom. So for y'all to understand, that's what I'm doing currently on my real account. This is my dummy account right now. But on my real account, I've de-risked by moving all of my assets that I have as collateral to a stable coin. When we reach a bottom, then I'll put, well, when we reach levels of a bottom where I feel like I can dollar cost average and deposit back into these assets that are like Ethereum or any of these other assets that I see going back up to all-time highs eventually, I'll then deposit back or swap back into those assets and ride that wave back up. And then you'll see my health score continuously improve. Does that make sense? Give me some ones in the chat if that makes sense. And the benefits of doing that.
Do it again. Say it again.
All right. Mon gave me a 1. Who is this? Who is this speaking?
It's Patrick.
All right, Patrick, I'm gonna go over it again. And I wish I could show y'all, but this website.
So you're just quick. So you're taking something that's unstable and moving it to stable. and holding
Yes.
it there to improve your score.
To improve my score. Exactly. But then what I'll do is like say like Ethereum right now is at what 1,100, maybe 1,000 or below right now. Say Ethereum goes down to $500, right? But remember, I had $9,000 worth, and I de-risked by taking. So I took all of it out and put it in a stable coin. Now, when Ethereum's at $500, I'm buying back in. I'm going all in. I'm putting it all in.
Got you, man.
Now,
Got you now.
now, when Ethereum goes back up $500, I've doubled my money. My collateral has doubled. So now I can go back and pay that loan that I took because the value has appreciated over time. So you can do this over and over. You can do this unlimited times. Like there's no limit on how many times you can do this. That's why this concept is so beautiful. And like I'm giving y'all like an overview of it, but I likely want to do this multiple times so y'all can really see how this thing works and how you can really benefit from this in a bear market going into a bullish market. So with y'all having this knowledge of how this works, y'all will be well ahead of anybody that's just buying and holding crypto right now, because now you can utilize your crypto in this bear market and possibly time the bottom. Like it's not going to be easy to time the bottom, but if you are able to time the bottom and then come in and say, I'm borrowing against my assets now and ride this thing back up to all new all-time highs, you can pay off this loan using the collateral that you have deposited without having to touch anything outside of it. That loan that you borrow, you don't have to come back and utilize that to pay the loan. You can use everything that's appreciating, that's sitting on the platform. I don't know if y'all know how powerful that is, because like I said, you can't do that
that's powerful. I got
anywhere.
You
You cannot do that anywhere else.
I like
Does
it.
that make does that make
Yeah.
sense?
Yeah,
Does
that makes sense. That makes
All right.
sense.
Y'all give me some ones if that makes sense. And
That's a
if y'all
power.
see
That's a power move. That's a power move.
yeah, that is major. And I'm glad that y'all are comprehending it, because when somebody told me this initially, I was like, ain't no way. You know what I'm saying? But for me to see it and do it myself, it's a way. And it's likely one of the most underutilized concepts in crypto. But I'm bringing it to here. I'm bringing it here to y'all live, so y'all have a baseline understanding of it. And like I said, like I'm gonna do this class multiple times, and it'll get more in depth over time, where you can see how I do different things with the platform. Because like I said, I'm primarily operating on the version 2. I use the version 2 because I know you can do all these things that I said. But on the version 3, I've not deposited on the version 3. I don't know if they changed anything, but they're constantly improving this platform to benefit the people that deposit on it. You don't have this ability to do the things that I just said, like using your collateral to pay your debt on any centralized platform. You don't have that ability. So keep that in mind. That's why DeFi is so powerful, right? There's some more things I wanted to cover here, but I'm gonna close this because I'm not gonna do this, and eventually I'm gonna withdraw this from this dummy account. But I do want to cover some of these.
I'll shoot you my address real quick. You can deposit that.
Where this thing at? All right. So I wanted to cover a few of these things here. Majority of I covered, but you know, y'all can take this down. I'll drop it in the chat. But if y'all have any more like detailed questions that I haven't answered, or if y'all want to verify some of the things I answered, like they have the frequently asked questions. Yeah, ZMR, this will be uploaded tonight, soon as soon as I finish. And I think I have this set till for 2
I have
hours
a
and 15
question.
minutes. Go ahead.
Does Aave have that thing where they have like insurance?
No.
Okay.
So it's a DeFi platform, so it's not insured. And
Okay, okay.
most of these lending platforms, they don't insure, and that is the risk that you take. You know, and I mentioned a little earlier, like, you know, with great risk, you can attain great reward from it. So just keep that in mind. It still is a very high risk. And like I said before, it's not
Yeah,
financial
but
advice to do it, but the opportunity.
but putting in at this time while it's low and then, you know, it going back up, I think this would be the best time for me to start getting in there. Even if I have to do what you just did, you put $100 in.
Right. You can literally like put it on like reoccurring. Like, even if you don't borrow against it immediately, you can deposit it to have it ready and have it sitting in a stable coin on USDC, because like I said, you can still yield interest from just having it deposited on the platform, right? It's not significant, but it's something for just sitting there. So if you wanted to
Yeah,
deposit
it's better than it
$100,
sitting in the bank, not really, you know, not
exactly,
really making your money more money.
right,
No,
right.
you see, yeah, I get it.
So yeah, you can utilize it like that. Just, you know, say every week you put $100 in there and don't borrow against it until you find a spot where you feel like, okay, I think this is the bottom. Based off the technicals, I feel like, and the fundamentals going on in the world, I feel like this is the bottom of the crypto market. Now I want to borrow against my assets that I've been depositing in this thing for 6 months. I have this amount of money. Now I'm gonna borrow against this asset, and we're gonna ride this thing back up. So that's how you can utilize it for sure. But like I said, I'll drop this in the chat. These are the frequently asked questions relating to Aave, and the different ways that you pay back your loan, how you avoid liquidation, um, when you need to pay back the loan. Remember I mentioned this, there is no fixed time period to pay back the loan. As long as your position is safe, you can borrow for an undefined period. However, as time passes, the accrued interest will grow, making your health factor decrease, which might result in your deposited assets becoming more likely to be liquidated. I covered that in the class. So just always keep that in mind. There's no term. Like there's nothing that says you have to pay this back in 20 years, 84 months. Like there's nothing like that on Aave. I can't speak for any of the other platforms because I don't utilize them, but I find Aave to be the best one for me. The other thing I wanted to show y'all here, I mentioned this too. I actually just showed y'all this. How do I repay with my collateral deposits, right? In order to repay with your assets, you just need to go to these are the steps to do what I was just telling y'all about. You can use your collateral to pay your debt. You cannot do that anywhere else in the world besides crypto. If you can, y'all point me in that direction, because I want to utilize that platform also. But I'm gonna drop these keynotes in the chat so y'all can you know, utilize them, do your own research. I highly recommend that with anything that you're being introduced to, do your own research. Because like I said, it could be something I missed. It could be something that I didn't understand clearly, and you may understand a lot better than I do. So just utilize every tool that you can and do your own research also. Do you have a link or just go directly to the site? For what, Rashida? You can unmute if you can.
Just for this this website, you said, what is it called? Agave? What is it called? Ave?
Yeah, so the platform is, well, you can type in ave.com and it'll come up and then it'll say launch this site and then it'll pop up with app.ave.com. And then you can utilize, depositing and borrowing against your assets there. But like I said, I got a step-by-step how I do it, and I'm gonna drop it in the server. It's actually already in the server. But I'm gonna repost it so y'all can see it a little bit more clearly. But let me finish up here. Let's see. I think I had maybe 1 or 2 more slides here. And before I get there, anybody got any questions besides that? If not, we'll do a quick review. So, like we mentioned, the objective today was to understand how we borrow against our assets in crypto, whether it be on a centralized or decentralized platform. I showed y'all, my preferred method of borrowing against assets, and that is on the DeFi side. I do not do anything on the CeFi side because I like to be the sole custodian of my assets. I don't want anyone or any entity to determine when I can use, move, withdraw, deposit my assets. I don't want them to have control of my assets like that. So, I appreciate, y'all coming here and listen to me rant about this, but I feel like this information needs to be pushed out because, we're in this current market where, a lot of people got into crypto, say maybe 2 years ago. And those who got into crypto 2 years ago, they probably at break even right now. And everything in crypto isn't the prettiest, right? But this is another way where you can find a way to navigate and be victorious in, deploying your assets to work for you. And that's what we want to do. Like every dollar that you bring in, you really want to deploy it to work for you, to bring in more either assets or dollars, So I hope y'all, got something from this, and I hope I explained it clearly enough that y'all can utilize this, even if with help from me after this class. And I hope y'all understand how impactful and powerful the tool you can have when borrowing against crypto in comparison to anything else that's out there. I didn't speak about it. You can also on some platforms actually lend your crypto out. Also, I know I've done it on KuCoin. So if you have assets that you want to lend out, you can gain from your crypto just sitting in place. You can actually gain from lending it out to other people and gaining interest off of it. So that's something I could talk about at a later date when we do this again. But yeah, like I said, I appreciate y'all. Nelly says, are we able to do more of these? 100% agree with you on this strategy, helping us out in this bear market. Patrick, good stuff. Appreciate you, Patrick. Dang, I'm messing up. Are we able to do more of these? 100% agree with you on the strategy. What you mean by that, Nelly, as far as do more of these, like specifically like this class or let's see. Yeah, what you mean by that, Nelly? If you can unmute and tell me what you mean about more of these. Yes, Pam, you certainly can lend your crypto. It feels so funny calling you Pam because I don't never call my mama Pam. Oh man, that's funny. It's funny just for me to say the name Pam because I call my mama. But yeah, Nelly, just to answer your question, yeah, we certainly can do more of these classes in particular or something along these lines. Definitely. Like last week we covered staking cryptocurrency also. Is this you
So,
unmuted?
yeah, can you hear me?
Yeah, I hear you fine.
So my thing is with the charting, because I know that you do this with the charts, correct?
Correct.
So if we're able to see a little bit about how you do with the chart and also, your strategy on this, that will be like very helpful.
Most definitely. So, so the concept with charting and incorporating this, like there's many factors. So it's not just the technicals. You have a lot of fundamental factors. You have a lot of psychological factors also, as far as when I choose to, deposit or swap my assets from a unstable asset to a stable asset. So there's many factors, but the technicals do play a part. If I see an area of weakness where I feel like an asset may decline significantly, that would put me at risk of liquidation based off of the technicals, yeah, I'm moving to a safer asset. I'm gonna move to a stable coin, uh, and then I'll find a better position. Especially, like I said, I got into this, roughly like 7 months ago. So when I initially started trying to borrow against my assets, like the values were significantly higher. So like I told y'all, I'm currently primarily almost all in stable coins because when I began trying to do this, I would have been liquidated if I hadn't have made that move. You see what I'm saying? Because I had borrowed a significant amount, but if I hadn't moved the rest of my collateral to a stable coin, then I would have been liquidated. So yeah, we can definitely bring in the many factors that contribute to me deciding when I should enter, exit, swap when I borrow these crypto assets.
Thank you.
No problem. Once I finally start getting into these investments, y'all can just start calling me P Money. What's up, P Money? Cool. But yeah, that's our review, and if y'all don't have any more questions, comments, um, we're gonna wrap this thing up. Only thing I ask y'all to do is to provide me some feedback, good, bad, indifferent, in the server. Um, I will be still giving away. Last week I gave away, or the last couple weeks I've been giving away NFTs myself and Moody. Um, I'll be giving away an NFT today also from my personal collection. I'm not sure if y'all ever seen it, but I'll drop, a link to what they look like in the chat. Also, I'll be giving away a NFT for somebody who drops and gives some feedback of what they learned from the class, what was most beneficial, what stood out to you, um, what would you like to see in the future, and how we can improve. So please drop that in the general chat, or the crypto chat, wherever you feel like you want to drop it. But do that, and I will be selecting someone to receive an NFT. The only thing that I require of you is to have download a MetaMask wallet that I can send it to. And once I select that person, I can further direct you on how to receive that NFT. And I think the NFT is pretty dope. So, but I just want to kind of make y'all more multifaceted in this crypto space. A lot of people don't are not familiar with NFTs, but this is one way that I want to kind of introduce you to NFTs by kind of giving you your first NFT, and from my personal collection that I created. So, but that's about it, man. If y'all don't have anything, thank y'all. Thank y'all. Thank y'all. It's been a very long time since I've been wanting to have a platform to, give the information that I've learned in this space back to people that I know can utilize it. And being in MSC, like I've got that now. So thank y'all. and drop something in the chat for me. And we're gonna close it here, man. Y'all have a great night.